All right, hello everybody, welcome back. So in the last video, we learned about the investing mindset, that why having a right investing mindset is required for long-term investing. Now, I forgot to give an analogy for developing the right investing mindset. Think of a swimmer who wants to swim across a channel of 100 meters. If he wants to swim across and go to the other side of the channel, he has to learn about swimming. He cannot just wish that somebody gives me a tip or somebody gives me a tip about swimming and suddenly I will be able to cross 100 meters without even learning swimming. That's why investing mindset is very, very important. Now, once we have touched about the investing mindset, let's talk about the investing strategy that we will be learning at S30. Now, the investing strategy is two-pronged. One, the qualitative analysis of a company. Another one is quantitative analysis of a company. We'll be spending a lot of time on the quantitative analysis of a company. But let's understand what is the difference between the qualitative and the quantitative analysis of a company. Now, in the quantitative analysis, we will be talking about the fundamental indicators, the numbers, the impact that a company is making over the years, how's their track record, not the track record of their share. The share might have gone up, gone down. We cannot take the decisions about a company just based upon the share price. Companies are like people. They perform, the talented people perform well, the non-talented people perform bad. Now, it may be possible that people are putting money onto some non-talented people, and that's why their share price is up. I'm just giving an analogy. Doesn't mean that non-talented people will be successful in the long term. So we have to understand which companies have potential, which companies don't have potential, without divorcing ourselves from the fact that how their share price is behaving. Market might be taking non-rational decisions, doesn't mean that we should be taking non-rational decisions also. So we will be doing the health checkup of each and every company based upon two things. One is quantitative analysis, another is qualitative analysis. Now, in the quantitative analysis, we have 4,000 companies in India. In US or all over the world, these number of companies are even more. So how do we do the quantitative analysis, that which companies might be good companies for investing, which are not? Then we will be looking at certain indicators, certain ratios. They are not very complicated. People make them very complicated. But we'll just simplify them in the further videos. We'll understand about that. Those quantitative ratios or numbers are ROCE, return on capital employed, ROE, PE, price to earnings ratio of a company, EPS maybe, earnings per EPS, earnings per share, debt to equity ratio. I'm just giving examples of these numbers. All right, and then maybe operating profit margin, sales growth. What is the sales growth? What is the industry PE? Industry in which this company is there. What is the PE of that industry? So a few numbers like this. We'll be looking at 8 to 10 of these numbers. Now, then a lot of people just focus on one indicator and they say that, oh, this indicator is really good and that's why it is a potential buy. But we will be looking at most of these indicators. Now, rarely it will happen that all the indicators or all the numbers of a company are bad and still it is a good company. If generally all the numbers of a company are bad, then it is safe to say that the company has not a potential growth. And it will not happen that all the indicators will be good of a company. If all the indicators of a company are really good, then everybody will be into that company. It's an obvious buy decision for everybody. And we would have missed that boat. Everybody would have invested in that company, and we'll be late in investing into that company. So the picture is the glass is going to be half full. But we will be looking at these indicators that generally what is the direction that the company is taking? Is it on a path on which it can grow, or is it on a downward path? Now, if out of these 10, let's say 6 indicators are good, then we will be shortlisting that company for the further analysis, deep dive. And we'll try to figure out that these 4 indicators are bad for the company. Why are they bad? For example, the profits of a company are very less right now. They are not making any profit. And then we come to know, once we go into their annual reports, we come to know that they are investing into the infrastructure, or they are building the capacity, or they are spending on some other activities, which will lead to future growth. So probably then we can be rest assured that it's fine. The profit might be less for this company for right now, but in the future it will be doing really good. In fact, they are investing into their future growth. So this is more or less what we will be doing in quantitative analysis. Now, quantitative analysis alone might not be sufficient for a company. We will be looking at the qualitative analysis also. The great companies are loved by their customers, not by the investors, not by the media, but primarily by their customers. The media people talking about, or the investing channels or the YouTube channels which are talking about this company is going to do great, or the investors say that, oh, I'm going to invest, this share has gone from 1 to 100, tomorrow it is going to go to 1,000. That's not the way that the companies operate. Companies are like entities, they are like people, they perform based upon their potential, and are the consumers or the customers going to give them are the consumer and the customer going to buy the things from them or not? So we will be doing the qualitative analysis, and we will be looking at how their customers, what are the customers saying about them? For example, if you talk to anybody who has bought an Apple iPhone, they love their Apple iPhone. Out of 10 people, if you ask, then 7, 8 people might say that, oh, I really love it, I cannot do with Android. Out of those 3 people, they might be saying, oh, it is very expensive. Oh, it doesn't do this. It doesn't do that. But if you ask them, at the end, if you ask them, are you going to buy them again? If the new iPhone comes in, are you going to invest in it? A lot of times, even the people who are saying that, oh, this is expensive, or this is not right about the iPhone, they will say that, oh, I am going to invest. I am going to buy the new iPhone. That's what really matters. That are the customers going to buy from this company again and again? Or are there going to be a lot of customers? That is one thing about the qualitative analysis. Another thing is, a lot of times it happens, you invest in the companies or you do the qualitative analysis of the companies that you have bought products from. For example, this pen, it writes very clearly. It's better than most of the pens out there. I have bought this pen on. There will be millions of people out there who would have bought these kind of pens because they felt the same thing that I felt. So another aspect of qualitative analysis is that what things you bought by yourself. There will be a million people who will be buying the same thing, who will be having your kind of experience. So in qualitative analysis, we will be looking at the customer experience that the company is providing. This is the way that we will be doing our analysis of a company. Firstly, how to get the needle out of the haystack based upon the initial indicators which are readily available on websites like screener.in You just need to look at these numbers and you'll be able to come to know that these companies are good or not. In fact, if you're a technical person, then you can run a query of these indicator ranges and you will just have a list directly that these are the potential companies which are fitting your requirements. So this is the way that we will be finding few needles in that haystack. Among those few needles, we'll be getting into the deep dive that if some indicators are bad, why are they bad? And what is the qualitative analysis of a company? Based upon that, we will be doing the investing analysis in S30. A lot of times we'll be doing 2-minute analysis, which will be basically looking at the fundamental indicators of a company just quickly in 2 minutes and seeing whether this company is a potential buy for me or potential deep dive candidate for me or not. All right, so this basically a bird eye view of the investing strategy that we'll be taking at S30. See you in the next video.